What is going on, guys? Welcome back to another market update. As usual, let's get straight to the charts. Many people are panicking right now, and the prevailing narrative is that the Bitcoin bear market has begun. Is this really the case? We will have to look at supporting and conflicting pieces of evidence to find the most probable answer. First things first, we have been talking about the 50-week moving average, which has played a crucial role in this cycle. It used to be that the 200-day moving average determined whether we were in a bear or bull market. But as Bitcoin's volatility has dropped significantly, it is no longer nearly as relevant. We're in a precarious spot right now because we're flirting with the 50-week moving average and are below the previous range highs of roughly 110k. There is a raging fight going on between the bulls and the bears right now because sometimes we get above the moving average with a nice wick below it, and at other times we're firmly below it. We're currently in the weekend right now, so the current price action is mostly noise until Monday's candlestick. We do have an interesting clue to consider though. Namely, Friday's close was firmly above the 50-week moving average, so this could signal at least some form of strength from the bulls. We expected to have a dump below our bull market trend line on the logarithmic chart, just like the dumps in September 2023 and April 2025. And as you can see, this dump is even more powerful than the previous ones. Next, let's look at our power law indicators to better understand the current market conditions. And as you can see, we're currently well below the median power law, which is pretty crazy in this phase of the market cycle. We should be well above it. So either this is amazing value right now, or the market cycle has ended and we're going to enter a bear market. So it's up to you to decide. But I also adjusted this lower band over here. Typically bear markets bottom out at a 60% deviation from the median power law. As you can see, I put the lower band to 0.4. So this gives a pretty accurate representation of where the bottoms typically are. You can get some wicks below it, but they're pretty accurate. So if we were to drop there, that would only represent like a 50% drop, because in a year's time, that bottom power law support line would be roughly at 60k. So this would be a highly unusual market cycle if we were to drop there. Just to be clear, the drop to that line is not the unusual part, it's just how low the percentage of the decline would be. Going higher first would obviously fix that. The log graph is telling us a similar story because the median power law should have been the resistance line of the next cycle, not this one. When looking at the Bitcoin power law clock, it's currently 11:32, so the top should happen within 2 months or less, typically speaking, because 12 o'clock would be on the 1st of January. As you can see, these two peaks happened very close to 12 o'clock, but the previous one happened a bit sooner. The crazy thing is that we are flirting with the red average line instead of going toward the orange line. So again, either this is really good value right now, or we're gonna go down. The detrended oscillator relative to price is even better at illustrating how unusual this market cycle would be if we already topped out, because we only reached this orange color here for a few days. In the last market cycles, we stayed in that region for close to a year or so. When looking at the local Hurst exponent, you can see that there's just a general sense of indecision right now. We're just oscillating over here. But the good thing is that we're kind of starting to bottom out here. Let's see if the next move is to the upsides. Now, let's see what Minotaur is up to. While we are contemplating whether or not the bull market will continue, the algo does not even care and will make money either way. The only difference is in its behavior. If the price keeps going down, it averages into positions for longer periods of time and then exits all of them at once for a large profit during a relief rally. If the price goes up, it just enters and exits many smaller positions, one after another. It is all about trusting it and letting it continue to follow its foolproof system, even when emotions are running high. No matter how good a system you have, the weakest element is always the human one. If you start meddling with the system without having a plan by thinking you know better, you no longer have a winning strategy. Instead, you will have something that could have made you a lot of money, but you chose to sabotage yourself out of fear instead. Obviously, calculated and rational decisions such as liquidation price or collateral type adjustments during key phases of the market cycle can greatly multiply your profits if done correctly, because that is like having a wise general directing his army to perform even better during pivotal moments. At the same time, the beauty of the system is that you don't have to be a general if you don't want to. Maybe you want to be a leader in a different aspect of your life while having an asset that works relentlessly for you in the background. Because I work with hundreds of clients, I have a lot of insight into what types of traders are the most successful. Every now and then, I get a client who just left their system running for 10 months without checking it. And what do you know? They discover that they're up 40% or something. Sometimes ignorance really is bliss, and it's similar to the stories where people forgot that they owned hundreds of bitcoins for like 10 years. Now, I'm not saying that everybody should be like that or that it's even the most profitable strategy, but it is definitely much better than actively sabotaging yourself. So, when looking at the bot's behavior right now, you can see that both the swinging and the scalping bots are still in many weighted DCA positions, where every following order gets larger as the bot's conviction grows. However, even then, the algos could still easily handle a drop all the way down to the bottom power law support, 50% below us, if we really are in a bear market. Any relief rally on the way down would reset the risk and make the bot even safer because it would take profit and restart its DCA strategy at a lower level. Or you could make things even safer by only doing spot trading during bear markets, or by adding enough collateral to make liquidation impossible. There is an appropriate strategy for everyone. Being in small temporary drawdowns is exactly how the bot makes the most money. It is not something to be feared because it is all calculated risk. And because that calculated risk is designed to be as small as possible, the system will keep serving you for years to come instead of blowing up like most of the other ones during events like this, when the rubber really hits the roads. As usual, if you're interested in the system, use the link in the description or pinned comment below to schedule a call. I'll be happy to set up your system. Now, let's get to the news. For today's piece of news, we have the viral article by Jordi Visser shared by Dennis in our Telegram group. The sentiment in crypto right now is frankly brutal. The S&P 500 is flirting with all-time highs. The Nasdaq has been on a tear. Gold just broke through 4,300s. Tech stocks are rallying. By every traditional measure, we're in a risk-on environment. Money is flowing into risk assets. Investor appetite is healthy. And Bitcoin is doing nothing. Sideways, consolidating, grinding, boring. Choose your own description. None of them hide the frustration that's permeating the community. Twitter is filled with variations of the same anxious question. Why isn't Bitcoin pumping with everything else? The article goes on with its fascinating thesis of Bitcoin experiencing its own silent IPO phase, where early investors are taking profits after making life-changing money, while new investors are rotating in. We're no longer experiencing flash crashes of like 30% in a day because the asset is maturing and the existing Bitcoin supply is a lot more evenly distributed. Instead, we're experiencing a boring but healthy sideways grind of granular and balanced supply and demand. But worry not, because this is not the beginning of the ends, but rather the end of the beginning. We will continue our grind higher as soon as this transition phase ends. Our mania phases will no longer be as fun as they used to be, and the bear markets will likewise not be as scary as we remember them to be. But this is all part of Bitcoin's natural growth. The article beautifully puts my own thoughts into words, so paraphrasing it from memory came quite effortlessly to me. I definitely recommend giving it a read. Now let's get back to the charts and let's start with the DXY versus Bitcoin. And the dollar has been doing exactly what we've been predicting over here. It has been having a bounce to the upside. And this is exactly what happened in the previous cycles as well. We always had a pretty significant bounce to the upside before going to new lows. And let's hope that this is exactly what will happen this time as well. Next, let's look at the CME chart. And as I told you, the weekly candle closed above the 50-week moving average, and this is also reflected in the CME chart. The close price was 104,000. That is relatively bullish. What this means is that if the CME chart doesn't want to leave a gap behind, then there's a high likelihood that we could close above the moving average again. But we could also easily leave a gap behind, and then there's a possibility that we will fill that gap later by going above the 50-week moving average again. Then after that, we would have to see whether that bounce higher is just a dead cat bounce or a move to new all-time highs. Either way, there's a high likelihood that we will at least retest the 110k region or so at some point. Next, let's look at the M2 money supply. And as you can see, the divergence between Bitcoin and the money supply is getting even larger. Technically speaking, Bitcoin should be bullish until the end of December. So if it wants to catch up, that's a nice opportunity to do so. Right now, if we're considering the lag between Bitcoin and the money supply, there's also a warning sign here because after the end of December, the price action is a little bit bearish right now, as you can see. But it could also be a bull flag. We'll have to see about that. Of course, it could be that this time really is different and there is very little correlation between the money supply and Bitcoin's growth, but that's not my base case. The S&P is obviously massively outperforming Bitcoin and recently reached its new all-time high, while Bitcoin is rug pulling us. Only this last move here had some kind of correlation with the S&P. People are saying it's because of the extended government shutdown, but there have also been times where Bitcoin has pumped during the shutdown, so there isn't that much correlation there. When looking at the crypto fear and greed index, you can see that we reached ridiculous levels of like 20 or so. The last time we reached a level like that was in April 2025 or so. So that's how long ago that was. And that was during that massive dump where everybody thought that the cycle was over when we went to the 70s. And the current area is also reminding me of that area. And I was also buying a lot of Bitcoin in that area. You can go back and look at some of my videos that I made back then. When looking at the monthly returns, you can see that there's been a massive reversal because October was bearish and November is poised to be bearish as well, unless we have a massive rebound over here. But December is still up for grabs. Now, back to Bitcoin's charts. So what do I currently think about Bitcoin's price action? On the one hand, we have pretty weak price action with clear bearish divergences. Bitcoin is also hanging on for dear life by struggling to stay above the previous all-time highs and the 50-week moving average. Even a bounce higher is not guaranteed to be anything more than a dead cat bounce. We're even going to form a death cross soon, but then again, each death cross so far this cycle has actually resulted in a bottom before rallying to new all-time highs. That's why it's important for both moving averages to be pointing down to actually count as a bearish signal, as I've said before. Then come the other contrarian signs. We never had a mania phase of degenerate retail risk-taking. It would also be highly unusual for Bitcoin to top out so far away from our exponential bubble projection. Next, we are in an overall risk-on environment, with other assets rallying massively. Furthermore, Q4 of year 4 has typically been the most bullish phase of the cycle, with tops never occurring before November or December. Next, there is a lot of fear in the markets, and the bear market narrative seems to be the prevailing one, which should act as a contrarian signal. Finally, instead of expecting a slightly less aggressive bear market of say 70%, we wouldn't be able to get anything higher than 50% if we retest the bottom power law support at all. Because why would we do that if we never even got the mania phase to correct from? So it is no secret that my decision was to buy a lot of Bitcoin during this dump. Instead of being fearful, I always get a huge sense of FOMO to buy during a flash crash, unless I think we're in a bear market. It served me well during some of the previous ones, so I hope it will serve me this time as well. Obviously, if we do enter a bear market, I won't just stubbornly continue with a strategy and focus on building a larger cash position instead to deploy that later, but we're not there just yet. By the way, guys, I will be going to the Bitcoin conference in Amsterdam next week, so I'm very excited to meet a lot of you guys there. As usual, subscribe to my personal channel as well if you'd like to see more videos like this. This is Saverio speaking, and as always, Thanks for watching.